I almost think you'd scare the public if you put this out. Like, why are they telling me this? Should I be concerned about my bank? Like, my insurance company doesn't tell me what they're doing with my assets. They just assume they're going to pay my claim, right? I think you've got to think of the unintended consequences of taking a public that has more full faith and confidence in the banking system than maybe people in this room do. That we want them to have full faith and confidence in the banking system. They know the FDIC insurance is there. They know it works. They put their money in. They're going to get their money out. So there's a select crowd of people that are in the institutional side. And if they want to understand this, they're going to find a way to understand this. There's a bunch of law firms represented in this room. There's a bunch of people that'll charge them by the hour a lot of money to explain this all to them. And it's fine. I don't have a problem with that. And they all have huge staffs. But I would be careful about the unintended consequences of starting to blast too much of this out in the general public.
What's up, guys? It is Thursday, December 29th. It's 7:55 a.m. and this is the crypto newsletter. So diving right into it, that video, there's a caption here. It says, they don't want the public to see this video. The bankers don't trust the banks, November 2022. And they're talking about financial crises and their lack of faith in our banking system and how to keep the public from freaking out by the FDIC. You can just tell right there. I mean, like, there's something about the break. And you see the data, you see everything going on right now, the macro and political environment, and we're at a crossroads. And the quarter one or quarter two, we're definitely going to see a huge event take place to coincide with whatever is about to happen. You can just feel, and hear all like the tension, and it's going to burst at one moment. And I believe it's going to be in the first quarter, if not the second quarter, because we have things starting to heat up. Remember the Moscow World Standard, right? We have, as of yesterday or 2 days ago, Russia's largest bank issued gold-backed digital financial assets. The issuance became the second major operations of the bank with a new class of assets. Russia's largest bank, Sber, formerly known as Sberbank, reported the first issue of gold-backed digital financial assets. The bank considers digital financial assets to be a great alternative to investments amid de-dollarization. Gold-backed DFAs represent certifying monetary rights whose price and volume depend on gold prices. So the DFAs will be available to acquire until July 30th, 2023. And the first deputy chairman of the executive board at Sber said that these kind of DFAs are a good alternative to traditional investments amid the de-dollarization caused by international financial sanctions imposed on Russia in the aftermath of the invasion of Ukraine. We expect the number of corporate clients on our platform to grow rapidly and plan to expand the product line of digital financial assets. Maybe more precious metals, so maybe digital copper or digital palladium, digital silver. That's ultimately where this is going to lead to. And yeah, so we're seeing things starting to heat up on the BRICS end of things, and with this Moscow World Standard and everything, we're at the final moment, because then we even have, is XRP backed by gold?
Anyways, look at this shit. Look at this. Look what you guys making me doing here. All right. So the crypto asset is assigned to be redeemable for a predefined amount of a reference asset or assets. For example, $1 or 1 ounce of gold or cash equivalent to the current market value of that reference asset. For example, $1 value, USD value, or whatever the USD value is of that 1 ounce of gold. So if that 1 ounce of gold is $1,700, the value of the reference asset to which 1 unit of the crypto asset is designed to be redeemable is referred to as the peg. So whatever that crypto asset is, let's say XRP, which has the value of gold, which you can convert to the value of USD. So you can convert that gold into that 1700 USD or that 1700 USD into gold, into XRP, into all three of those seamlessly. The stabilization mechanism is designed to minimize fluctuation in the market value of the crypto assets relative to the peg value. In order to satisfy the effective at all times conditions, banks must have a monitoring framework in place verifying that the stabilization mechanism is functioning as intended.
They're working on this regulation. They're working on the framework for all this stuff. So then we have this. This was very interesting when I read it, and it sounds very eerily similar to what happened with the crypto market, and the time frames line up. So the bursting of the .com bubble. And it's just crazy, man. Like, history repeats itself. It really does. It repeats itself, and it rhymes. And we can take a look to the past to get a glimpse of what the future holds and where we're at in the present day. So spending on marketing also reached new heights for the sector. 2.com companies purchased ad spots for Super Bowl 33, and 17.com companies bought ad spots the following year for the Super Bowl. Then on January 30th, 2000, 12 ads of the 61 ads for the Super Bowl were purchased by .coms. At that time, the cost for a 30-second commercial was between $1.9 million and $2.2 million. It was a lot of money back then. Meanwhile, Alan Greenspan, then chair of the Federal Reserve, raised interest rates several times. These actions were believed by many to have caused the bursting of the .com bubble. According to Paul Krugman, however, he didn't raise interest rates to curb the market's enthusiasm. He didn't even seek to impose margin requirements on stock market investors. Instead, it is alleged he waited until the bubble burst, as it did in 2000, then tried to clean up the mess afterwards. Finance author and commentator agreed with the criticism. On Friday, March 10, 2000, the NASDAQ Composite Stock Market Index peaked at 5,048. However, on March 13, news that Japan had once again entered a recession triggered a global sell-off that disproportionately affected technology stocks. Soon after, Yahoo and eBay ended merger talks, and the NASDAQ fell 2.6%. But the S&P rose 2.4% as investors shifted from strong-performing technology stocks to poor-performing established stocks. On March 20th, 2000, Barron's featured a cover article titled "Burning Up Warning: Internet companies are running out of cash fast," which predicted the imminent bankruptcy of many internet companies. This led many people to rethink their investments. That same day, MicroStrategy announced a revenue restatement due to aggressive accounting practices. Its stock price, which had risen from $7 per share to as high as $333 per share in a year, fell $140 per share, or 62% in a day. The next day, the Federal Reserve raised interest rates, leading to an inverted yield curve, although stocks rallied temporarily. Many people saw the legal actions as bad for technology in general. That same day, Bloomberg News published a widely read article that stated, "It's time at last to pay attention to the numbers." On Friday, April 14, 2000, the NASDAQ Composite Index fell 9%, ending in a week in which it fell 25%. Investors were forced to sell stocks ahead of tax day, the due date to pay taxes on gains realized in the previous year. By June 2000, .com companies were forced to reevaluate their spending on ad campaigns. On November 9th, Pets.com, a much hyped company that had backing from Amazon, went out of business only 9 months after completing its IPO. FTX, I believe it was November 9th that this all went down. By that time, most internet stocks had declined in value by 75% from their highs, wiping out $1.75 trillion in value. That's how much we've about wiped out. In January 2001, just 3.com companies bought advertising spots during Super Bowl 35, I believe it is. Without question, September 11th attacks later accelerate the stock market drop. Investor confidence was further eroded by several accounting scandals and the resulting bankruptcies, including the Enron scandal in October 2001, the WorldCom scandal in June 2002, and the Adelphia Communications Corporation scandal in July 2002. By the end of the stock market downturn of 2002, stocks had lost $5 trillion in market cap since the peak. As its trough on October 9th, the NASDAQ dropped 1,114 points, down 78% from its peak. We're literally, you replace the word .com bubble with crypto and it's like on par. So it's crazy how history repeats itself. Then this was some predictions from higher up in Russia. So here's our humble contribution. He said, what can happen in 2023? Civil war will break out in the US. California and Texas becoming independent states as a result. Texas and Mexico will form an ally state. Elon Musk will win the presidential election in a number of states, which, after the new civil war's end, will have been given to the GOP. All the largest stock markets and financial activity will leave the US and Europe and move to Asia. The Bretton Woods system of monetary management will collapse, leading the IMF and World Bank crash. Euro and dollar will stop circulating as the global reserve currencies, and digital fiat currencies will be actively used instead. Season's greeting to you all. Yeah, so there we go. The cream of the crop is 8 to 10 right here, where it really spells out, if you're living in the US, how things could potentially unfold here. And number 8 is definitely something that you want to be prepared for if that's the case, a civil war. We're talking 100-year cycles here. So this is definitely interesting, and these are some bold calls, but I wouldn't be surprised if they play out. Then we had this: China to launch first national digital asset marketplace. While trading digital collectibles has been popular among Chinese collectors through heavily regulated marketplaces, this is the country's first official foray into NFTs. A ceremony celebrating the launch of the marketplace will be held in person in Beijing, the country's capital, on January 1st. Starting the year off strong, that's for sure. The platform will be run by a trio of state-owned and private entities: China Technology Exchange and Art Exhibitions China, both of which are government-backed, and Huban Digital, a private company, according to a report by Chinese state media outlet China Daily. The marketplace, whose name translates to China Digital Asset Trading Platform, will also be used to trade digital copyrights and property rights along with collectibles. The platform's underlying blockchain is called China Cultural Protection Chain, and NFT has been popular. So we know that. Yeah, so that is going to be big. We have China launching an official national backed digital asset marketplace, the official China digital asset trading platform. Huge. So then we have this too. Bank of England receives 20 applications to develop CBDC wallet prototype. 20 companies have submitted applications to create digital wallet for the Bank of England CBDC project. Quant, one of its supporters, founder and CEO of Quant, believes a well-designed CBDC could help provide a real-time view of risk and current currency outflows to help implement specific and targeted measures to prevent financial contagions from spreading further in the event of a crisis. Pilots involve extensive public and regulatory consultation with business and institutional involvement to ensure that CBDCs meet our democratic needs. Meanwhile, with Project Rosalind, the BIS Innovation Hub London and Bank of England are looking to the future, testing how to issue, embed, and settle CBDCs for retail payments use cases with industry participants. The project includes the private sector in an effort to innovate different payment use cases and applications that use retail CBDCs for a better experience. All right, now let's go into this. Digital dollar will eventually come, lobbyists say. Michael Greco, policy research director at the Digital Dollar Project, says the Fed needs Congress to pass the right law first. It's more of a question of when rather than if a central bank digital currency will be established in the U.S., policy research director at the Digital Dollar Project said. He said there's a potential in the next few years for a digital dollar in the U.S., but that the Federal Reserve is waiting for Congress to enact legislation before it can move forward. He doesn't expect Congress to pass such a law next year, but he says he expects the conversation to advance on Capitol Hill, especially in regards to privacy in 2023. Another person said that CBDCs have made huge leaps in other parts of the world, such as South Korea and Europe. He said next year from the European Central Bank, they may move forward to the pilot phase of a digital euro from a development phase, which would be a major step given the size of the European Union. He said U.S. authorities will be looking to see how the ECB tackles privacy concerns of a digital currency and how it would interact with the banking system. He also sees the potential for a wholesale CBDC, which would be used in transactions between banks as opposed to a retail CBDC, which would be used by consumers in everyday transactions like buying a cup of coffee. Lipsky said that in light of implosion of crypto exchange FTX, the issues that some crypto exchanges face do not extend to central bank digital currencies, and no, they do not. All right, let's keep going, because Ripple had tweeted, Novati Payments is using our solutions to make cross-border payments faster, simpler, and more secure. Read how the digital payments company provides secure and timely transactions between Australia and Southeast Asia with our global payment solution. So let's take a look at this video.
Enable them to. If you look at some of the disruption in payments and financial services, part of it is about just becoming a participant and breaking the shackles of traditional banking or traditional networks, being able to compress commercial relationships that, say, the banks have been able to build for 40 or 50 years. Disruption is not just about technology, but it's about becoming a part of an ecosystem, being able to participate. Yes, Peter Cook, I'm the CEO of Novati Group Limited. We've been listed on the Australian Stock Exchange for about 6 years and have been a partner in RippleNet for about 2 years. Our customers break into two: other fintechs, banks, financial intermediaries, where we are primarily providing an infrastructure layer or ecosystem for them to enable them to further their financial services and payments. And then we've got many hundreds of end merchants and businesses that use us to complete payments, whether it be issuing, acquiring or cross-border payment services. So our clients are B2B payments companies. So essentially right through that consumer to business to RippleNet network through to the final receiving party, we're getting faster transactions. We pride ourselves on having financial services licenses in a number of jurisdictions and actually right at the moment in the final stages of getting a bank license in Australia. We can use our licenses, we can use our tech, we can use our market position, join with RippleNet and meet others that are in similar positions and create a super network effect.
And that's what Ripple's creating, a super network effect. It's sending ripple waves through the system, and they can't compete. The traditional system can't compete with the product that Ripple has developed. All right, now let's go to this. A former US treasurer on crypto investing in 2022. The train has already left the station. This was last year around this time. Rosie Rios. Then you got this, like 2 days ago. IMF, sending money abroad or receiving it will be easier in the future. New tokens and platforms may transform cross-border payments. Bullet Train, new tokens and platforms may transform cross-border payments and potentially much more. You're damn right it's gonna. Definitely much more. Not just cross-border payments, but all payments. And then that was from the IMF. Then you have the Federal Reserve Board. Leaders from across the payment industry are preparing for the 2023 launch of the FedNow service. Hear from them in this Pioneers of Now roundup. You got the train leaving the station yet again. Going from an old steam train, it looks like, to a fast, like kind of hyper, like subway thing right here. So like the train is leaving the station. You can see it's the same kind of thing as this. And it's just so funny how they're all on the same page. I mean, like they put out the same stuff. It's the same graphics. It's the same verbiage. And they ultimately know what's to come, and we do too. All right, then we have this on a link too. Ripple Labs business partner D-Money announced a partnership with Visa. The partnership will expand Thailand's near instant cross-border peer-to-peer payment system in 2023. To learn more about the link to portfolio company Ripple Labs, download our app. But I mean, like Ripple's tentacles are just stretching out across the whole entire world, and 2023 is going to be a light up year, that's for sure. Ripple, new protocol for international settlement. This seems like from MDPI. I haven't heard of it, but blockchain-enabled cross-border e-commerce supply chain management, bibliometric systematic review. It goes into here. It talks about the Web of Science from 2013 to 2021 were collected as the research samples. An 8-year research kind of paper. This is in China, actually. And as it goes through here, they're talking about the cross-border supply chain. And then you can see they talk about Ripple. So the Ripple protocol as a new protocol for international settlement as widely used in distributed cross-border e-commerce payment systems due to blockchain technology adoption. The Ripple's cross-border e-commerce payment system is associated with its network through a gateway, facilitating the real-time payment for financial institutions. For financial settlement institutions and banks, it is achieved through the Ripple network, thus enabling global real-time and decentralized cross-border payments. Bam, right in there. Every country knows about Ripple, that's for sure. Then you have this from the IMF. So IMF said XRP is decentralized. What is SEC talking about? This was a document he found on imf.org, crypto assets and the framework of digital assets. And then it's talking about, I'm not sure what the NFA means, but BLCAs, payment tokens, and no liability utility tokens, example, Bitcoin, Ethereum, XRP, bam. So you have the central banks of the central banks saying it is a utility token or a payment token. So obviously the US has an incentive to slow Ripple down because ultimately they're providing the tech that's going to displace the US dollar as the world reserve currency, but initially as a payment currency. Then we see this from Crypto Airy. 3 largest banks in Japan with SBI and others set out to build a proprietary trading system that can buy and sell digital asset securities without going through a stock exchange. Japan divisions of Securitized and Inside R3 key to underpin DLT infrastructure. Securitized, I believe, is Ripple funded, and R3 has heavy ties with Ripple as well as with SBI. So like the connection just runs so deep. And remember the NTT data document, that PowerPoint about Interledger kind of bridging all the money by 2025. Yeah, so we see all the connections. They've been in cahoots for a while now. Then we have this. It was breaking. Zelensky announces he is planning to join World Economic Forum in Davos to sign new post-war loans with Blackrock. That sounds like a death sentence. So I feel as if like we know what the next move is. BlackRock is setting itself up as like an international institution, kind of like a World Bank, IMF, to provide these post-war relief loans. But basically it's going to be like shackles locking people into having to follow the orders of these high-level international institutions. So we're going to have to see how this pans out, but we're kind of already getting a narrative. Remember, the United Nations and Stellar partnered up, and MoneyGram partnered up to do Stellar Aid, and they're distributing relief funds to Ukraine as we speak. So the BlackRock's probably all in cahoots with this, right? So during the conversation, it was emphasized that certain BlackRock leaders plan to visit Ukraine in the new year. The president thanked Larry Fink for the work of the professional team that BlackRock has allocated to advise on the structuring the reconstruction projects. So we already got the narrative. We're seeing it all pan out. Yeah, guys. So that's going to be it for this crypto newsletter. I will see you guys in the market update.